Tech continuing to lead the S&P this year. Looking at the Tech Spider ETF, ticker XLK, up nearly 40% year to date, climbing even higher today as the broader market rallies. Apple, the driver there, of course, trading at a fresh all-time intraday high, getting a boost after Qualcomm's quarterly results, which cited strong licensing operations, most notably its deal with Apple. So joining us now to discuss why he thinks Apple still has room to run, Bank of America Merrill Lynch senior equity analyst Wamsi Mohan. Wamsi, thank you for joining us today. So you're focused on the cycles between iPhone launches and what that means in terms of Apple's future potential performance. So where are we at within the cycle, and why does that give Apple room to run here?
Yeah, thanks for having me, Leslie. I think the interesting thing is that most people look at Apple's performance year to date and say, oh my God, the stock's run so much, it's up 60% year to date, there's material outperformance behind us, so there's really not much room to run. We think the discussion should really be focused on how did Apple perform since the last iPhone launch. Investors are really focused on this iPhone cycles, and so we went back and looked at historically how has Apple performed relative to the S&P and in absolute terms from one cycle to the next cycle. And what we see is that this last cycle was actually a very poor cycle. Heading into the iPhone 11 launch, you actually got an 8% relative decline to the S&P since the launch of the last iPhone to the release of the iPhone 11. So to put this in context, in past cycles where you've had that sort of underperformance, you've actually followed by material outperformance, which is what we think is the case heading into the 5G launch.
Of course, past performance is not always indicative of future performance, as we know, with the markets. What makes you think, especially given some of the contours of the upgrade cycles being longer with regard to the iPhones, that this time will be similar to what we've seen historically? And are you concerned that there are certain changes within the iPhone environment that could make things a little different this time?
No, that's a good question. I think that when you look at past cycles, the real outperformance that you've actually gotten was when the iPhone 5 was launched, which was the change in the carrier's LTE adoption. It was not really when the form factor changed. You got some really nice incremental performance, both with the iPhone 6 launch and the iPhone 10 launch, which were form factor or OLED changes. But you really got the best outperformance in past cycles for LTE. We think a use case like 5G, which can significantly improve what you can do with the phone, is going to be much more critical. So we actually think that looking forward into 5G over a multi-year cycle, Apple has the opportunity to start to dominate the discussion, which it has not really for the last few cycles, which have all been sort of boring cycles. Now, when you think about the replacement cycle that you alluded to, we actually think that Apple's replacement cycle has become somewhat stable at the moment, partly because they have introduced this trade-in program, which has been very, very effective. You heard Tim Cook on the call talk about how trade-ins have been 5x last year, and that is actually having the reverse effect of shrinking the replacement cycle marginally, but that's enough. Even a shrinkage by a few months is enough to drive 10 million units. So you actually are at a point where you're starting to see that cycle stabilize, and then when you go into the launch of a new materially new technology, that really drives some tailwind for the stock.
Now, with Qualcomm's comments yesterday saying that it expects 200 million 5G smartphones to be sold next year, how much do you think Apple will be a participant in that?
Yeah, so for next year, clearly Apple doesn't have a 5G iPhone yet. So, when they launch a 5G SKU in September of 2020, they will have some element of benefit starting then. Fiscal 21 is going to be a material year, and so will fiscal 22. As you know, 5G is not all going to be launched simultaneously across all regions. There is a SKU of having Korea and China adopt this first and U.S. later. So as this rolls out, what we see is that Apple will launch a high-end SKU with a higher ASP, a premium product that will launch in certain regions at certain times. It will be a staggered launch because not everyone will want to pay up when the network is not ready. So we see this as a prolonged cycle, as an elongated cycle, but we think that Apple in next year's 200 million is going to be maybe 5% of that number. It's not going to be a very huge number to start off, but we think that over time, as different geographies roll out and they'll have a wider SKU, that's where we see the upside potential come to play.